Good morning, and great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I am your host, Colvin J. Millett, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. If this is your first time listening to this show, you in for a treat today, because our mission here is very simple. That is to empower our community through financial literacy and real estate education. Guys, we are legacy building. That is what we do over here at this show. So I'm super duper excited today because we have with us, as I like to say, we work to have the best people, the leaders, the groundbreakers, if you will, the trailblazers in their field. Those people who, when you have met and engaged and talked with them or even heard from them, you got yourself a word. That's what we look to do. So I am so excited today because, we like to talk about money, right? That's what we talk about right here, right? Because we like to talk about money because we want to make sure we make some, but we also want to make sure that we can keep some. So I want to give a quick shout out to our listeners that listen to us from Monkey's Corner. And y'all know my mama live out there, all the way back down to Hollywood. What you know, no good. We love you. Thank y'all so much for tuning in. Pastor Evans, as always, Elder Evans, thank y'all for being faithful listeners. And for the hundreds and thousands of you in our market who tune in every week, guys, you all rock. But we were talking about money, so I don't want to get too far off of the subject, right? Because we want to make sure that we're making some, but most importantly, we want to know how to keep it. So we got a great guest today. We got a CPA. We got to get off of counting off our fingers, and we count on them. How about that? So look here. We have with us none other than Eric Pierre. Now, Eric is the founder and CEO. Founder. I started this thing. And CEO, I am him. I'm the top there right here. That's who I am. Pierre Accounting. Eric, how you doing today?
Man, am I on a podcast? Am I at church, man? Wow, man. I love your intro. And I want to remind everybody, particularly men, the book of Proverbs says, a good man is one that builds enough wealth to pass it down to his children's children.
Look here, we talk about that whole excerpt of children's inheritance for children, so forth and so long. That's our thing right here. So that's what I'm talking about. See, I told y'all, look, y'all listeners, I told y'all what the greatest is. So Eric, how are you doing today, my man?
I'm doing great here in Houston, just trying to stay dry with this uneven weather. And you mentioned being in South Carolina. Some of my brethren that are Aggie fans are still hurting over what the Gamecocks did to them recently. That was quite brutal.
Well, we won't talk too much about it, but just know that.
No, you can, because I'm not an Aggie, so I don't mind.
Just know that we do what we can when we can do it.
Yeah.
So if you don't mind, Eric, give our listeners high-level overview of who you are and what it is that you do.
Right. I'll do that. So as you mentioned, my name is Eric Pierre. I'm a second-generation CPA. I grew up in Houston, Texas. I had aspirations of playing professional basketball. I did have a cup of coffee actually playing pro ball in the ABA for the senior year Guardians, but I was not good enough to go to the NBA. So let's go ahead and get that out of the way. But in high school, I'm shooting hoops in my backyard. My dad sees me, pulls me aside and says, son, not getting any letters from Dean Smith, who was the coach at UNC, Roy Williams, who at the time was the coach at Kansas, Jim Herrick, the coach at UCLA. No letters from or calls from David Stern, who was the NBA commissioner, because at that time, high school players were going to the NBA. So just in case this NBA dream doesn't work out, you may want to have a plan B. And so my dad, he's a retired CPA. Him and my mother still happily married, live in West Palm Beach. I researched his field, and I was good in math, and I read his recession proof, so I decided, why not? And plan B wound up being a good plan A for me.
I love that. That is priceless. So look, for our listeners, look, if y'all are listening to us on the radio, I'm watching him. I see him. So obviously, he is in the sneakers. He is a sneakerhead. I see the shoes lined up. I love it. Look at a whole display case. I imagine some of them may be autographed, but
no, I don't have any autographed shoes. I do have an autographed basketball from Hakeem Olajuwon. That I do have.
Oh, man, look at it. That's what I'm talking about right there. I love it. I love it. So, Eric, let's kind of get into a conversation about, obviously, kind of unpacking some of that what you do. So here on our show, we're always talking to our listeners about managing finances, obviously. So we got the person that's kind of entry level, if you will. Hey, I'm trying to figure out how to organize and put my money together. We have the novices who are probably a little bit more into investing, maybe invested in the 401k or other stock options or stuff with their job. And we have maybe the intermediate who is maybe a little bit further along, starting to invest in real estate. And then obviously on the very far end, we have those who have been kind of diverse in their portfolio. They're investing in real estate, some actively, some passively. They're in the stock market, some actively, some passively, and they diversify their holdings and they're strong income earners. So pick a line, so to speak, and give us kind of what it is that you engage with your clients about. So like one of the first things, how do you unpack like where they are and set a strategy for, that's a good one right there.
Yeah, it is.
And set them
It's interesting. My wealthiest client, I saw him in Austin last week and I teased him. He's got so many entities. I feel like every time we have a meeting, I probably need to turn the meeting into a tax red zone channel. It's like, and here is so-and-so with another real estate property, another entity that's got this many units and this cash flow and this depreciation. And I'm friends with the guy that hosts that channel, actually, by the way, and he endorsed my book, The Great Tax Escape.
Oh, okay.
Yeah,
we want to get to that. Go ahead.
Yeah, so depending on where you are at, it's different, but I'll say at a high level. So that particular client, he's what's called a qualified real estate professional. He spends more than 750 hours in the trade of profession in real estate. Now, why is that important? You don't have to be multimillionaire to get that status, because you mentioned you're in the real estate industry. Realtors do that. Also, if you have a spouse that meets that criteria, that qualifies you on your tax return as well. And what that means is that then all your passive at any real estate activity, whether you're an LP, which is limited partner, or a GP, most people are going to be probably passive through an LP. People with bigger money that have things at risk will be a GP. Most of your audience is probably going to be an LP. Then those passive losses you don't have them suspended, meaning that you don't have to have passive income to offset it. You can offset any of those losses against ordinary income. And so that particular client this past year, he had about $1 million income, but because of his status in other tax planning, he only paid $30,000 in income tax.
Let me brace myself. I should have held on to something. So Eric, it's interesting that you even like get on this vein. Yeah. So the beginner, for our listeners, guys, look, let's be real, let's be plain. So for the beginner who doesn't have the understanding, doesn't understand that the categories in the tax code will say that this. So if you're making this much money, but you are doing this, like you said, meeting this threshold, so now your rate of taxation changes because of it, or this deduction or whatever. And I don't want to get into the weeds on it.
Right.
But that's the thing that we're missing when we start looking at what's all tax strategy. If I do this, then I can do this.
Yes.
It protects these assets so that I can reinvest them or otherwise create legacy, generational wealth for my family.
And obviously you want to make sure that you pick the right asset when you invest, because I saw a colleague say the other day, make sure you also not only look at the ROI, there's also another R as an ROH, return on hassle. I stole it from my buddy Ryan. Sorry, Ryan, I stole your content.
I love that. We talk about that often enough, Eric, that the investment, so the investment of time, resource, the frustration, all that stuff. But that is interesting to pull that out as a separate return on hassle. I really love that. I may have to borrow that, Ryan, as well. So, but Pierre, you made mention of, so if our listeners, guys, I'm going to give the title, but Eric, I want to unpack this a little bit as well. The Great Tax Escape. So you're an author.
Yes, Amazon best-selling author in 2 categories, but Amazon doesn't give plaques like YouTube, so I don't have a plaque to show for, unfortunately.
I love it. So you wrote this book, The Great Tax Escape. Why making more money doesn't mean you have to pay more in taxes. I love the title. So I'm telling you right now, I'm going to add it to my list here, and so I can listen to it for sure. But tell our listeners about the book. Like, obviously, you can't give all the spoiler alert, can't give everything.
Right.
But let's talk about it. Where did this concept come from, and what strategies have you kind of introduced here through the book?
So for the Great Tax Escape, it came this summer. I guess I took what I would call a mini sabbatical, spent about half the year in Southern California, reconnected where I started my business. And I was looking to figure out, how do I better connect with my clients, as I had just spent a couple years doing employee retention credit. The IRS put the skids on it. And so I'm shifting. And then, I met Paul and Tony Marie, and they pitched me about writing a book. And so I agreed to do it. So I spent the whole summer working particularly with Tony, who's an exceptional business coach. We met weekly and we figured out what people want to learn. And then the key part was to make sure to capture my voice, because, I'm into sports and shoes and other luxury items. So yeah, I'm that bougie brother, right? And yeah, I'd be embarrassed to show you my eyewear and watch collection. I won't do that. And so in the book, we talk about a couple of things. So I start out talking about the first time you get a big paycheck, think it's gonna be a big amount, and then with the taxes, feels like half your money did a Houdini act, disappeared, right? And then we get into why. We also mention why most CPAs do not talk about advanced tax planning. I'm not going to say all of them, but a lot of them do not. I'll go ahead and share why we talk about more in the book. But one of the main things that most CPAs are too caught up in the compliance world, because compliance is a lot. And so what differentiates me and there are other like-minded CPAs, I'm not the only one, is that in my book, I briefly talk about the Redeem team. Think about 2008, Kobe Bryant, LeBron James, Dwayne Wade, all in their prime, coming together to retake glory, retake our gold medal from the evil clutches of the world, right? So I work with the Redeem team, and we vet out various strategies. We get presented strategies from various sources. We vet them out. And so that's how we keep up with it. We also mention, we actually show examples of CPAs or tax professionals, financial professionals that are against people who make a lot of money getting tax breaks. That's another thing. There are a lot of tax professionals that are envious of wealthy people, which is sad, considering that, one, Cap Gemini says that 2% of Americans have assets $1 million or more when you exclude a personal residence. So one, there's not many people actually are wealthy. However, the good news is that last year, there were 500,000 new millionaires, and overall 80% of millionaires in the United States are first-time millionaires, meaning they're not entitled trust fund kids. People who took risks. We should never resent this, because unfortunately they tend to be the job creators. And the tax code, quite frankly, rewards you for taking that risk. That's something that makes us different versus most of the modern world.
Exactly.
And so we give case studies, examples of clients, and I did change their names and some of the facts, examples of where they make a lot of money and we get their tax bill as little as 0 or up to 10, 20%. We don't give away the specific strategies, but we give examples of things. And in the impact it makes to their lives, we've had people able to increase donations to their charitable causes. We have clients that use the savings to buy luxury cars. I took advantage of that a couple of years ago. I'm hoping if the new administration do what they do, I'd like to upgrade my car. So I hope they restore bonus at 100% for cars next year. So that's what we talk about. And the whole point is that you don't have to be Elon Musk or Jack Ma or Bill Gates or Donald Trump or Jeff Bezos to have these strategies. Now, they have bigger numbers. While the focus of the book is primarily on people that make $500,000 or more, there are things we talk about like retirement planning strategies, estate planning, that you don't have to make that kind of money to do. So it's just that since you talk about church, the problem is that, as the scripture says, the good word about people perish for the lack of knowledge. And lastly, I just want to say that I get irritated by people in my industry saying, oh, I'm going to tell you secrets, loopholes. So first of all, loopholes, most of the things that I do for my clients are not loopholes, because loopholes are actually ambiguous. The U.S. tax code is this, I think, the longest singular book in the world. In fact, has 40% more words than the King James Bible. Okay. So meaning that it's codified, supported by opinions and tax law. It's a secret because most people don't know about it. And most wealthy people just don't go shout out like Jeff Bezos and go, hey, I use these depreciation strategies and buying all these buildings in my warehouses to make sure we pay 0% income tax. So it's a secret because you don't know it, but it's not a loophole. Most of the stuff is codified.
So conversation I have around my house on occasion is this whole adage, you want to hide something from somebody, put it in a book, right? That's
Yeah.
say that. And unfortunately, sometimes it holds true. I'm going to take you back to where a little bit ago when you quoted scripture, because one of our faithful listeners here on the show, that is something that she says to me all the time, that the people lack, and also the people lack vision. People just can't see, don't look outside of what their current situation, circumstance is, and everything they do, view, or see outside of their current situation and circumstance is anti. It is, I'm against this, or they should be able to do this, or that's wrong, or what have you. We have conditioned ourselves, and listeners, guys, look, we digging in now. So look here, I'm sorry I got the shovel out on you, but the reality is we have conditioned ourselves to be anti the things that God blesses, if that makes sense.
Yes.
If you are a business owner or you're investing and you're growing and creating wealth, when you're an investor, so here's something to think about. When you're an investor, houses and all that stuff, you're employing people and you give people a place to stay, right? Your vendors, you pay them, helping them grow their business. So that is one thing out of this whole thing that people just miss. They miss that because people are making money, yes, but they're employing people, they're providing other benefits and things to people. And let me put this shovel away, Eric. Let me try to fill this hole in real quick and get you back up on level ground. But the short version is we have conditioned ourselves to believe that money is evil.
Correct.
And those who have money are evil.
There's over 2,000 verses in the Bible that talks about money, and 40% of Jesus' parable addresses money.
But there's one scripture that that we all love to quote, right?
Yes.
That one. But it's not that you're serving. It's, okay, I'm earning. Let me do this for somebody. I can afford to do this. If you've ever given somebody money that's on the street, if you've ever bought a meal for someone in a restaurant or in the line behind you at Starbucks or wherever it is, just simply because without that money, you wouldn't have been able to do that, right?
Yes.
You ain't smile at the people behind the counter at Starbucks and say, look here, will you please give them their coffee for free? You didn't do that, right?
No.
But anyway, I'm sorry. Too far.
That's okay. No, I appreciate it. I think it's important. In fact, there are 2 books that helped change my business. The first one I recommend is Poverty, Riches, and Wealth by Chris Valentin. And it talks about these things. And then the second thing is a book that I did the audio book. It's called Accessing Wealth Through the Courts of Heaven by Robert Henderson.
Hold on. You said the last one is what? Accessing,
geez, that black accent from the South. Accessing Wealth Through the Courts of Heaven by Robert Henderson. A friend of mine gave me that book, and it's helped turn things around as I'm pivoting and just learning about the spirituality of money. And particularly, a lot of us don't understand the real story of the vineyard owner in Matthew 20. So
Come on. Look, you can't pull it back now. You don't.
All right, I'll explain it real quick. So I'm gonna give it high level, but you should go back, read the passage, read the book. So basically, in the beginning, the workers come to the vineyard and they agree to work for 1 full denarii, right, for a whole day's work. Mm-hmm. So that was perceived to be a lot of money. But at the end of the day, the vineyard owner still needed some more workers. He found some people, and then they said this. It says, "We'll take whatever you think is fair."
Mm-hmm.
So when it came time to pay, the guys that worked for an hour got a full denarii. And so the guys that worked beginning, they only got one. And the guys beginning said, wait, why'd you pay them what you paid us? It's, well, you made an agreement with me, so I'm just honoring the agreement. And so the whole point is there's 2 things. One, so for the first time hearing that I'm not supposed to agree with God, that's like, well, what, I'm supposed to argue with him? In other words, we're supposed to trust in God and his provision. But second, as you want to apply it to the secular world, you need to be aware of your value, okay? Because no one's going to tell you your value. You have to know your value. Mm-hmm. And that was the eye-opener for me because I had some deals with people that I didn't realize I was losing my value. And after that, I went back and redid contracts. Mm-hmm. And I changed partners on some tax strategy deals because that opened my eyes. And I did the math, and I'll share this with you. Over the last 2-3 years, I cost myself $100,000 of income because I wasn't paying attention to how the deals were done and what was actually available to be paid. So I'm fine. I'm not broke or homeless, but if you take $100,000, invest in 10%, about 7 years, that's 200,000. Now you do that you can figure out how long it takes to be $1 million. So that's eye opening for me. And that's why it's important. And I'm actually going to segue back into this book. So see the same thing. So if you make $400,000 or $500,000 in, say, state of California, and you're single, you're going to end up paying $200,000 taxes. So I had a young man that asked me to help him. He didn't move forward. Fortunately, he would have saved at least $80,000 in taxes over a 30-year period. That's $1.5 million saving. That's why it's important to have your affairs in order, because it's costing you wealth.
So one of the things you touched on, like early on, kind of a segue or plug for our listeners, guys, what Eric is talking about is scalable. So if you're making $400,000 a year, okay, this is that outcome. But if you're making $80,000 a year, or maybe a little bit less than that, these strategies are scalable. So you definitely want to make sure that you connect with Eric on that. So you've been doing this a long time.
Yeah, I'm starting to see gray hairs in my beard now over this.
Well, yeah. Well, come on. You see what it's about.
Yeah, but I'm envious because you look closer to Frederick Douglass than I do.
I know, look a little bit stately.
Yeah. You look more distinguished. Yeah.
I love it. So the book. So one, let's make sure we get that back out for our listeners. The Great Tax Escape, While Making More Money, doesn't mean you have to pay more in taxes. Guys, you can get that on Amazon. Where else can they find it at, Eric?
Well, we have a website dedicated to the book. It's called greattaxescape.com. You can get a free copy there if you don't want to purchase on Amazon. So that's
blew my whole mind over here. I'm over here going to the website right now for our listeners, guys. That is greattaxescape.com. All one word, obviously. But y'all, please go check that out. Now, Eric, I'm going to ask you, like, what has been for you a biggest epiphany as you kind of delve further into this world, as you have built your business, as you helped and served all these people over the years? What has kind of been that greatest epiphany, that thing that just blew your mind when you figured it out and found it out?
Wow. I'll say this. The people that I work with that are wealthy in the upper 1%, they have a very strong resolve about themselves, and they're willing to take risk, even though they can't necessarily see the outcome, but they believe that it'll get there. And it gets easier for them to take that risk because they've achieved it before. You can't be afraid of failure. And, that's something I have to remind myself, because I have one client in particular. When I started with him, he was almost at zero. Then he made $3 million. Now he's getting low again, but he's probably on the verge of making $20-30 million once the properties are out of litigation, which they're about to be. It's about to get $20-30 million off carried interest in deals. He has a major hotel brand that is ready to pay him and his partners $9 million to build a beautiful building on top of their building right now. They just have to clear litigation, but once that's done, it's right there. So no risk it, no biscuit.
I love it. No risk it, no biscuit.
Yeah.
I love it. So Eric, this next one is kind of that, well, it's the hindsight question that we get, right? It's the mic drop. It's like, hey, I've been doing this. I figured this thing out, or at least I figured out something, whether I figured it or I figured out something. But if I'd have known it way back yonder when, what would I have done differently that would have had me much further than where I am, either financially or lifestyle or whatever it is? But it's all lifestyle. I mean, we've had guests on the show that they live remotely. I've had people that we've interviewed that run businesses from the jungles of South America. Like, I had one person, essentially a small house hut on top of a mountain overlooking this massive valley. It was impressive, man. Yeah. But short version is, what is that for you? What is that thing that if you would have known it would have transpired and changed your whole world?
The answer is, it took 3 times for me to get it. You can't let fear get in the way of a vision that God has put before you. So I'll give a quick story, 2 instances. So in high school, I was cut from the basketball team my sophomore year. Then I got myself in incredible shape. I was playing pickup ball. I was a pretty good ball player, and I actually held my own against All-Americans in pickup ball. And the All-American teammate I had, Adam Hall, who wound up being a star player of Virginia and actually hit a game-winning shot against Duke on ESPN. And I remember there's a picture of him dunking on Shane Battier. He was 6'8", Vince Carver didn't have the jump shot, and he broke his foot his junior year when he was about to be lottery picked. So he was that guy. He was the best guy I've ever guarded. The only guy I've ever been scared of guarding. I've guarded 7-footers. I've been in the league, but that guy terrorized me. He asked me to play with him his senior year, and I said no, thinking that some of the guys that didn't get along were still playing, but I never went back and checked that that we had a new basketball coach. He kicked all those guys out. All the racist white boys, losers, kicked them all out. So that was one. And then it took me years to go into business because around 2005 or 2006, one of my supervisors, who's a close friend of mine, Matt Gannon, gregarious British guy, pulls me aside one day. He could see I'm rusting my cubicle. He said, Eric, I got to be honest with you. You're not cut out for corporate America. You need to go on your own. You'll be much wealthier, much happier. And I'm thinking, who's this? This is bougie ass white man telling me I can't make, how dare him tell me I can't make up the ladder. And then I got told that again by an older black lady at a church in Houston. And then I got told the third time out in California. The third time's when I finally got it. And then God forced me out when I reported racial harassment against an Indian colleague at a place of employment. I was terminated for it. I did win my claim. It was settled outside court, but I could never go back to corporate America. And looking back, when we get the revelation, oftentimes God uses other people because we're too busy seeing what we think we see about ourselves, for whatever reason, our insecurities. But oftentimes there's other people that can see your potential. And when multiple people start saying that, that's God talking to you. Right? If these people don't know you, but they say the same thing, well, that's probably God speaking to you. And so my regret is I wish I'd started my own business sooner. Maybe I'd be further ahead. Probably would have been a lot happier, but I'm where I'm supposed to be now. But it took the lesson of holding back. So now I know when I'm afraid I get afraid of making investments. I have to take some chances. I just moved out of Austin, but God showed me, I was going to tell my clients, but if they listen, I'm going to have a part-time home in Austin, Texas, but I found a way to make it affordable so I don't lose my shirt doing it because I need to be around those particular clients in Austin more with some things that are going on. It just hit me when I was at this function. And so you just have to go for it. It's that blind faith. And you're not supposed to see the next step because if you see the next step, you won't appreciate when you get there. You won't put into work. If I knew that, and I'm not saying this is my calling, but if God told me today, hey, Eric, in 15 years, you're going to own the Houston Rockets, I'm not going to work hard for it because I know it's going to be done. Why would I put into work? Why would I go learn?
Yeah, that's real there, man. When you were talking, what I saw was running. When we walk, we're supported in our walk by, we don't lose the ground, if that makes any sense. But when we're running, we lose the ground because we launch ourselves to the next step versus easing ourselves over when we're walking.
Right.
I literally just saw that while you were talking, man. I love that because that's one of the things, man. We are so afraid oftentimes, and that's where we hinder ourselves because we won't take the leap, we won't take the jump, we won't run. So I meant to get this out, but how can people, obviously we got the website for where we can get the book. For our listeners, guys, you can go there and get it free, but you can go get that real copy over there at Amazon.
Yes.
So that way you got it so you can peel it, make notes, and you can share it with other people. But Eric, where can our listeners get in contact with you? Where can they reach you? Where can they find you?
Okay, so you can contact me through my firm, pierreaccounting.com. You can also contact us through social media on Instagram, Twitter, Facebook. If you type Great Tax Escape, we have a social media page there. Also, since there's not many Black CPAs, if you type Eric Pierre CPA, you can find me that way too.
Awesomeness. Awesome. So Eric, I want to take a moment just to thank you. I've really enjoyed the conversation today. We've had a great time. I want to thank you for taking time out of your busy schedule to be on the show. And we're going to have you back because we got to kind of unpack and maybe some of these other strategies. But I'm going to download and get this book, bro.
Thank you.
I tell you that right there because I love that kind of stuff because in order for us to achieve at a higher level, it will be interesting and it's more insightful when you have the knowledge that other people at those levels have. Does that make sense?
And those people, they went and found people who had that knowledge because the people that are truly wealthy in this world, they know their limitations and then they find the people and invest in the user risk to invest in getting that knowledge. And then they know how to invest and get the appropriate ROI.
Exactly. So again, I want to thank you from the bottom of my heart for being on with us today. I really appreciate it. For our listeners, guys, look, y'all know, look here, we've been doing this a while. So y'all know how I feel. You know what I say, I always put the two of those things together, and I give it to you this way, which is to tell you that I love you. I love you. I love you. And we're going to see you guys out there in those streets.